Well, everybody knew there was a recent rally in gold as it ran up, and where is the precious metal now? It did have a big sell-off this week. I bring in our guest, Will Rhind, founder and CEO of Granite Shares, to take a look at gold with us. And Will, it's great to see you. Before we even start this chat, I want you to take a look at a couple of photos of you and I here on the floor of the New York Stock Exchange. You may remember that day in 2014. There we are. You brought bars of gold. Now, security was surrounding us. Each one of those was 25 pounds and 400 ounces and worth 500. Look at the security guards. I think they were protecting me. They didn't think I was running with it. 400 ounces, 25 pounds, and they were worth $500,000 at that time. That last week was worth over 1.7 million. So I thought that was a lot of fun that you and I did that, and you were part of the World Gold Council at that time, and you're still following gold closely. What's the story here?
Well, I think the story is that photo. Oh my goodness, brings me down memory lane in terms of being there with you all those years ago, and it felt like at that time, you know, for gold to go through $2,000 would be a big stretch, but here we are, $4,000 plus, and gold doesn't seem like it has really any chance of slowing down at the moment. So I think we're in an environment where the dollar is easing. We've lost, about 10% this year in terms of other currencies. The Fed is now, especially with today's inflation numbers, looking like it's going to cut again, and we're seeing that premium for US dollars in terms of the US interest rates versus the rest of the world start to come down. And that's been reflected in a weaker dollar, weaker currency, which is helping to lift the gold market.
And I think about gold, what we've seen, I mean, it's up 56% year to date. And this pullback this week seemed like a big deal, which it was. I mean, no doubt at one point it was down 6%, but for the week it's down 3.5%. That's not really a big deal when you see the run up, and got close to 4,400 a troy ounce at the highest point. But I've had guests on, Will, who are looking at 5,000 and over 6,000 for gold in the next few years. So do you think that's possible or likely?
It is, because the environment that we're in is one where, first of all, central banks around the world continue to buy gold. Why are they buying gold? Well, they're buying gold because gold has become the de facto reserve asset to the US dollar, so recently surpassing the euro in terms of that global status. So that is something that has been going on for the last decade and will continue to go on. Central banks are buying it for the same reasons as ordinary investors are buying it, is they need to diversify principally foreign exchange reserves, but most notably dollar assets, and are using gold to do that. We know that the US has held interest rates high and higher than the rest of the developed world, with the exception of perhaps a few countries, but broadly speaking, now interest rates are coming down, so the US is easing, and those interest rate differentials will become more normalized with other developed world currencies, meaning that the premium on the US dollar is coming down. That also, I think, benefits gold. And look, we're still in an environment where we have inflation that's a little bit more stubborn than perhaps the central banks officially would like it to be. Geopolitical risks are still out there, and people are looking for diversification plays with markets at all-time highs.
What's interesting is Newmont Mining came out and saw some meaningful positive outlook, this gold miner, Newmont Mining. And so what does it mean for investors in gold and ways to invest in gold? What do you recommend when people ask you that?
Well, from my perspective, I think, running a gold ETF, ours is BAR, ticker BAR, that is certainly the simplest way to get exposure to the gold price. And that's why gold ETFs have become so popular. They allow you to put physical gold in a portfolio. Now, that being said, there's nothing wrong with gold mining stocks or gold mining as an investment. It's just the caveat that that's not a one-for-one replication of the gold price, that you have other risks and exposures at play when you invest in a stock of any variety, but specifically a gold mining company. So I think what we're talking about in this particular segment, but this year, is a gold market and a gold price that's rallied, 50+%. And the most efficient way to play that rally was to buy gold ETFs. And that's why we and other people in the market have seen, huge demand for gold this year.
What does it mean when they say U.S. gold reserves have plummeted to the lowest levels in 90 years, while the central banks worldwide are loading up? What does that mean? I mean, how do we interpret that?
Well, I think that what people are referring to specifically with that is they're talking about this really secular trend that's been going on for well over a decade now, probably 15 years, of central banks around the world buying gold. Now, we know obviously that we've got some major central banks out there like the Chinese that are buying gold, but we've also got a number of other central banks that are buying gold. And this is typically a pattern that we see where we're not talking about the US, we're not talking about European central banks, we're talking about the Chinese and other central banks around the world. Now, typically, what these countries have in common is that they are exporting nations that are accumulating large reserves in US dollars and are using gold to diversify, just like ordinary investors.
It was interesting because Mohammed Al-Arian actually flagged that what we were seeing now is that the central banks held gold now, and it actually exceeded the U.S. Treasury holdings. I mean, gold has always been viewed as a safe haven. I know it sold off recently, and some of the reasons why people said it sold off were A, it ran up so much, it had room to pull back. B, the geopolitical tensions quickly came down with prisoners being released, hostages being released from Hamas or Gaza. I mean, it seemed like there was some settling over there, and the low interest rate environment. And, it just seemed like they took a moment to step away from gold, but that gold is always the way to go. I will add in the other metals. I mean, gold sold off this week, silver sold off this week, but copper gained this week. I mean, is it usual to see the divergence like that? I mean, your thoughts on some of the other metals?
Well, it's certainly unusual to see a move of the size that we saw in gold in terms of the downside move. But then again, it's also unusual to see a move of this magnitude year to date in gold. So, we're living in unprecedented times, really, where, a move of 50% plus in a year is really incredibly unusual for something like gold. Let's call it a very low volatile or volatile asset class and a reserve asset such as gold. So in the context, I think, of the move upwards, the correction that we saw was nothing really more than that. But it just shows you, again, how big the move has been this year and how unusual that has been in the historical context of gold.
All right, Will Rhind, great to see you. I'm glad you enjoyed our photos from yesteryear in 2014. And I think we look exactly the same. And I hope you still have those bars somewhere. Will Rhind, founder, CEO, Granite Shares. Thanks for joining us. Always nice to see you, Will. Thank you.